Good morning, guys. This is a quick review on the Euro USD. Let's go and review the whole thing. So, like we talked on in different video, we have the formation right here. We have the ABC, double top. The market dropped from the high, creating another ABC, A, B, and C. Double bottom too also. It's very important, and I always go back to this. If you learn this ABC structure with the double bottom, you learn how to operate the market. You don't need to learn nothing else. Always is good to learn. It's just the same. What I mean by this is just we're learning this and this market structure, you will be able to make money out of the market. The next, you need to learn how to leverage your money and do different things that you need to learn. And always, I encourage people to continue learning about the market. Not go crazy, just be specific and what are you looking for. So double top, ABC, drop of the market, double bottom, ABC, the market resumed to the high, and right now it makes the new high. It looks like this is an ending structure. We don't know yet. We need to see the market rebound to the upside and respect this top or break this top and close to the downside. Basically, do the same pattern that we have right here on the top and we have right here on the bottom. Like I always tell, I start my video, I really encourage you guys to understand what is a Fibonacci. So let's throw the Fibonacci right here. No Fibonacci to no resistance and support, which is very important. Right here, we have the market hitting the 50-day moving average and rebound from there. So let's go to a lower time frame. We go to an hour and we see what happened in an hour. We cannot have too much information. We just have the new low and 3 consecutive bars to the upside. So let's see a 15 minute. So now 15 minute, we have the double bottom right here, ABC correction. So we have ABC, it break the true, it break the low and rebound. This is an irregular correction, which is also very good because you already know that the market break this point and rebound. It's a reverse bar right there and the market went all the way up. But like I explained in video before, if the market don't break the point B, it's still very bearish. Like you can see right here, it retains that point and it run completely out of fuel and it's time to go down again. So we have to pay attention what's will happen in the next couple hours. The market is going to be going down and retesting this point. If it doesn't break this point and reverse again, it's meaning like this rundown is already finished. But you never know. If you're going to create your entry around this point, like I always say, put your stop loss on this point, the lowest low, and the closer you go, you make your entry through that low, the less money you risk. So that will be always very good entry. Like you create your entry right here around this price, that is 1080, and you stop loss right here. But you don't know yet. You need to wait until this structure is complete form. So it's nothing there. We don't know yet. That will the run is still to the downside if the market price is under the point B. So if on Friday you guys notice this, like I was explaining, you have the market touch this Fibonacci, break it, and rebound to the upside. But the market, if you go and see, the price never was above any of this correction. So the price always stay under. Like you can see right here, you got the double top, lower high, lower high, lower high, meaning the whole momentum is to the downside until the market rebound from that, break it, rebound, go back again, and finally breaking to the downside. So that was a nice move. And you have, let's say that you will sell that just to show you how much money you can make from a move like this. So if you go and you pop the window selling the market, something with the euro, something with the forex market, you can buy and you can sell. You don't care in forex market, you don't care what's happened with the stock market. The stock market can be up and down, forex market can be up and down. You just need to find your right position. You can make money to the downside and you can make money to the upside. So you can make money selling the pair and you can make money buying the pair. So you don't care what happened with the market. Okay, you just need to know your position. So right here, let's say that we have, let's put like I did the other day, 100,000. This is just to educational purpose. It's just to show you guys how much money you can make with an account like this. The margin that you're going to use from your account is 222, and you're going to be making for every P that the market move $10. So basically, 1 point up, $10, 1 point down, $10. If 100 points is $1,000. So right here, the entry on Friday, it should be in this bar right here when the market break that low right there. So let's say that you entry was 12.14. So you put limit, and then the price you write down is 12.14. 12.14. That's your entry, right? You sell in the market at $12.14. That's what that means. You have 100 units. So you take profit. You put your take profit in the first 15-day moving average, which is 1063. So you write down right here 1063, and your stop loss will be right here on that price right there, 20 pips. That you can see right there. That was your order, and that was your leverage. If you make an order like that, you use on a margin account. Let's say you have $1,000 account, and your margin that you use from that account to create an order like this is 224. You have to see how good forex market is. This is an advantage you have in forex market. You just using from your money 224 on the $300, meaning it's not meaning that you're risking that money, meaning like the market to create this order, you have to hold the market puts on hold that much money in order to create an order like that. And then you sell the market in 12.14, this price right here, right? This, let's say this is happening on Friday or yesterday at 5 o'clock. So you sell at that price right there, and you take profit at this price right here. So basically, I'm sorry, at this price right here, 1063, how you can see right here. If the market come down and hit this price, that's how much money you make, 1,510. As right now, by the price, if the price was right now, let's say your target was 11.19, how the price is right now, 11, yeah, 19. And 11.19, you will be making $950, which is a very good money to start the morning on Monday. And yes, you have to be working and know what you're doing, but it's always opportunity in forex market, because you can sell, you can buy, you make money to the downside or to the upside. It doesn't matter. You don't care about what happened with the market. You just care about found your right move. And that's how you found your right move. That's why it's so important that you keep in mind that you learn, that you need to learn the formation. You need to learn the ABC correction, because that's going to give you, the ABC is going to show you where the market is going to be next and where your order it will be. So like right here, you never do a move around this number. Like I explained in video before, you don't buy on the top, you don't sell on the bottom. You just need to wait to the formation. You need this market structure. Structure is everything. If you follow a structure, you put on the side emotion. You know, involve your emotion because you know what's going on. So you put you hunting or you looking for your structure. Like ABC double bottom is good, or irregular structure with the bottom we break the A or the formation. Right here, the market look like it's going to continue to the downside, where we think the market is going to be ending. Well, that's why you have the Fibonacci, because the Fibonacci is going to show you the support that you have right here. You have a 0992 as a first support. It could be the market come and hit this price, or go to the 62 and hit this price, or go to the 50%. And that is a very important number, because in 50%, if under 50% the market is very bearish, everything above 50% the market is still bullish. It's just pulling back. So that's what Fibonacci is going to help you to understand where the market is going to be landing. So if the market hit 78%, which is 09, 90 something, let's say around the 09, 90 something, and the market is starting to create a structure around this line right here, between these two lines, you create an ABC, you're getting ready to buy the euro to the upside. So that this works. Okay, so this is very good that the pair is doing this. I hope you guys understanding and learn and always educate yourself. Remember, educating yourself. That's why I'm doing these videos, because I want to share what I learned from in all these many years. It was sent me and made me set apart from the people spoke with the market. It's nothing special. It's just learn this structure and be more educated when it's come to the market. You need to learn always more and more, but remember, don't overdo and don't try to learn everything. You don't need to learn everything. Learn what is going to help you to make money. At the end, that's what you want. You want to make your own money for whatever you want. So thank you so much for watching. Hope you enjoyed this video, and I'll see you in the next.